How we get on, people? Luke here from LAGFX. We are back today with a new Sunday sessions video. If you guys are new to this series, it's basically where I choose a few pairs that I feel hold good potential for the coming week, and I break down the analysis I've performed to give you guys a better understanding on how you can look at placing positions in these markets. Now, if you do go on to have any questions with regards to the analysis I go through today, please leave them in the comments below. And if you do enjoy this video, don't forget to leave it a thumbs up. Now, the first pair we are going to touch base on today is going to be the Great British Pound to the US dollar. So this is the cable. As you can see in the analysis on screen, I am expecting price to correct itself temporarily, providing us with some bearish structure, trading us down and into this area of demand. Once price trades us into this area of demand, I'm expecting for supply to be offloaded. So any sell orders and any supply that's being introduced from these highs, and the highs that will be created moving forward, so potentially these here, for them to be offloaded, so removed from the market, those shorten to close those sell positions, and for demand to be introduced here. So those waiting to buy in, and that should push the market to the upside. Now, the reason why I'm expecting demand to be introduced from this area here is because this actually represents a hidden order block, and the overall structure of this market is a bullish one. So with those two pieces of confluence, that would suggest that price should, in theory, trade us higher from this area. So how can we look to tackle this market this coming week? Well, we can absolutely look to take part in the corrective wave that trades us lower. We just need to be very careful, cautious with the positions that we are placing, just because the overall bias of this market is bullish. So at any point, enough demand could be introduced to actually give us the flip in the S&D balance. This is purely just an area I feel price will reverse from, and where we will see accumulation take place and the start of the next higher time frame impulsive wave. So I will be looking to go short from here. I'm expecting price to pull back, set a lower high within this bearish structure, create us those lower lows and lower highs, trading us down and into this demand zone before then taking us higher in the market longer term. So I'll be short in here, closing those short positions here, looking to get introduced in buy positions, and we can look to set our take profit just below these last highs. Why? Because this guarantees that our take profit can be achieved, and the reason for this is because if you look here at the structure, price will be following the laws of bullishness, creating lows, highs, higher lows, and higher highs. So that's my analysis for the Great British Pound to the US dollar market. Okay, now moving over to the Great British Pound to the Japanese yen. We want to see the same type of structure being introduced into this market. We want to see temporary bearishness before longer term bullishness. As we know, the Great British Pound is one of the major currencies, and the Japanese yen is seen as quite a weak currency. So we expect longer term bullishness with this market. So we expect longer term bullishness with this pair anyway. And when we complete a full top down analysis, it's quite evident that this is a bullish market. So similar to the cable, we want to see price pull down and into an area of demand. I've got two marked out here with alerts ready, just to notify me when price is traded into a relevant area. I want to see that supply being offloaded, demand being introduced, and ultimately a flip to the upside. Now, what we could actually do is mark out this area here. This also represents an area of demand. We have last sell to buy orders. Again, these sell orders will be removed from the market. Any sells that have been introduced here will be removed, and demand buy positions ultimately will be introduced from this area, potentially giving us that flip. If for any reason there isn't enough demand here to actually give us the flip we want, price absorbs this entire zone. We do have this zone here to work with, as well as this one. Again, as I mentioned, I've marked out these two zones to give us two potential entry points for longer term buy positions in this market. Very quick and brief analysis here on the Great British Pound to the Japanese yen. It's all that's needed. We are simply waiting for price to pull back, trade us into an area of interest so we can look to get introduced. Heading over to the US dollar Swiss franc, this market has quite recently broken structure to the downside on the extreme higher timeframes, suggesting that this market is going to continue in a bearish way. We just need to find an area for price to correct itself so we can look to take advantage of the next impulsive wave. So the bias here and what we want to see is kind of the opposite to the first two pairs. We want to see price correct to the upside before an impulse to the downside, whereas the first two pairs we went over, we wanted to see a correction to the downside before an impulse to the upside. Now you'll notice that the US dollar is the base currency for this pair, whereas the US dollar was the quote currency for this pair. Both pieces of analysis for both pairs suggest weakness in the US dollar, and I think that falls in line quite well with the fundamentals at the moment and everything that's going on with the US economy. So that only gives us more confluence with the analysis we are performing here. So as mentioned, I want to see price trade up, provide us with a distribution, a break of structure to the downside to confirm an end to this corrective wave and the start of the next impulsive wave to the downside. Once price does break structure, we can then expect a lower high to be created. Why? Because in bearish structure, we have lower highs and lower lows. Price is bound to trade into a fractal area of supply found within the impulsive wave that broke the structure, so this one here. So we wait for price to trade up and into that, deliver us with a second fractal break of structure in and around this zone. That confirms the end of this corrective wave here, and that's when we look to short this market. So that right there is my analysis for the US dollar Swiss franc. Now finally, just touching base on the euro US dollar. So the US dollar again is quote currency. We want to see weakness in the US dollar. Why? Because we want to see this market actually trade us higher now longer term. To back our analysis and to give us further confluence, we have seen that price has broken structure to the upside. This is considered a break of structure. Why? Because the high that has been broken, this one here, created the lowest low. So this would be considered the last impulsive wave. This is the last protected high. Breaking that, price trading above that, would tell us that we are now following the laws of bullish structure, where we break those highs and we protect those lows. So with that in mind, we've had the impulsive wave. We're now seeing price correct itself, trading down and into this zone here before what may be the next impulsive wave to the upside. So how can we look to get involved in this market this coming week? Well, we just need to wait for price to break structure fractally here to give us the confirmation that price is actually now ready to put in the next impulse. The corrective wave trading down has finished. So I'd like to see a break in this high here. This is the last fractal high within the bearish corrective wave. As soon as we see a break in that, this is when I'll be looking to get introduced into those long positions. So we want to see price trade up, pull back to give us the opportunity to get involved in a refined entry, and then we can expect price to trade us higher, creating what will be clear bullish structure. We have a low, a higher low, higher high. So what I'm going to do is actually set an alert just above this area here, wait for that break of structure. Once we have that, that's when we can begin to look for our opportunities to go long. A lot of the time, Forex is about sitting on your hands and waiting patiently, waiting for opportunities to play into your hands, rather than being preemptive with the decisions you make and being preemptive with the markets themselves. As you guys may know and understand, especially those that are in the VIP chat, I'm a firm believer on quality over quantity, which is the reason why we place no more than 3-4 positions a week. Sometimes we don't place any positions at all. It all depends on the market conditions and whether we are delivered with every piece of confluence we need and the confirmation parameters to actually enter a position are met. Having such a strict regime and trade and plan allows us to have an extremely high success rate with some amazing risk to reward ratios on the trades that we do place. Now that's going to summarize this Sunday sessions video. I hope you guys have enjoyed. As I said at the start of the video, if you have any questions or queries with regards to the analysis I've gone through today, leave them down in the comments below. And if you have enjoyed, don't forget to leave it a thumbs up. Now, I just want to say a massive thank you for watching, and I'll catch you all in our next Sunday Sessions video.